3 and 2 and 1. Good morning, everybody. What day is it? Wednesday? Happy hump day. And I forgot what day it was for a second. Welcome to Pre-Market Prep. Spencer Israel. I got Joel here. I got Dennis here. We got stuff to talk about. We're going to talk about oil, commodities, the fact that banks are getting hit now. We're going to talk about earnings from Nordstrom and SoFi and Salesforce last night. And when Ford has news, we'll talk about that. We'll take questions from our chat. So smash that like button and let's go to work here. This is Pre-Market Prep. Where's my intro?
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Apparently the stream started while I was laughing, but oh well, whatever. Let's bring Joel on here. Joel, what's up, man? How we doing?
Sorry about that, Spence. Good morning. Good morning. We're in the green here. Did I share my charts? I sure did. Nice range overnight. We almost kissed, or we got close to yesterday's low, 78 and a quarter. Yesterday's low, 75. So, man, you talk about a big level. I'm moving up off that 4,100. I'm moving up off Friday's low. Boom. I'm moving it up to 42.75 here. Must hold support level. 50 handles above it. Crude, no stopping it. Up 740, 110.79. Gold giving a little bit back, down 12.30, 19.31.50. Silver in the red by 36 cents at 25.19. Bitcoin, it's just hanging up near resistance, down $175 at 44.065. Ethereum futures, they're just slightly in the green by 450 at 29.87. So what do you guys want to talk about today?
Million things. What do you want to talk about? You want to talk about the big Oilers win last night? 3-0 over Philly? That was good.
I said oil, not Oilers.
We like Oilers, not oil.
How about me staying up way past my bedtime last night for the Michigan State basketball game?
The Michigan win?
Yep.
Am I the only one here that
so
watched
it's worth it. You know what the worst is when you stay up really late to watch a game and then they lose.
I went.
Oh, you went to the game?
I went. 8:30 tip. TV's
Nice.
ruining everything.
Am I the only one here that watched State of the Union last night? This seems to be.
No, I didn't watch it either. I watched a little bit. I turned it on for 20 minutes.
All right. Well, it wasn't very interesting.
Well, tell us about it. Tell us,
Spencer.
It wasn't interesting.
It wasn't interesting.
I mean, but I felt compelled to watch it, especially with what's going on in Ukraine right now.
What did he say about the Ukraine situation?
It was a reiteration. I mean, the news was broken ahead of time that the U.S. is going to close off their airspace to Russian planes. So he announced that, but that was already out there. Talked a lot about the financial sanctions, kind of skirted around the energy angle here. I mean, he did talk about how we will be releasing oil from our reserves, but kind of skirted around, the fact that we rely on Russia the world relies on Russia for a good part of its energy. So kind of skirted around that angle a little bit.
Didn't talk about not buying
didn't talk about that.
Russia's oil.
No, didn't talk about that. What else did he talk about? Gave a special shout out to Intel. If you're wondering why Intel had a random pop at 4 a.m. this morning. Pat Gelsinger, the CEO, got some nice airtime and got a special shout out. Who else got shouted out? Ford got shouted out.
Shouting out my whole portfolio.
A few other companies got shouted out, but no, it wasn't super interesting, honestly. I just thought we would all be watching it, but I guess not. Yeah, and that's all I got on the State of the Union. It was honestly interesting to hear what he had to say about Ukraine, but the rest of it was pretty boring.
Pretty safe.
State
of the Union.
Yeah, it's pretty boilerplate stuff, right? Stonebridge says I'll never get that time back again. That's true. No, I'll never get that time.
I'm glad I only wasted 20 minutes on it. I watched the last 20 minutes. They stood up a lot and clapped a lot.
Yeah. That's all.
It wasn't very exciting.
That's all it is. The one thing I wanted start really on today was oil, and we'll talk more about commodities with our guest today, Angie Setzer, who it's been a long time.
Yeah, good old Angie.
We had Angie on the show, but she's an old friend of the program, and she's a commodities expert. She works in commodities, so we're going to talk to Angie about that when at 8:35. But let's just talk about oil here for a second, because how high did we get last night, Joel? 111.
I mean, we're right at the highs. I'm looking at front month contract. We got to 111.50, and we're at 111. I mean, there's
pretty remarkable stuff. I thought 100. I thought that was the big level, and
there's no levels.
We've blown right past it. I thought
there is no levels.
Yeah. So
it doesn't even matter on the technicals on any of this stuff. Again, as we keep getting escalation over there. So I mean, until it de-escalates, it's all just Ukraine. That's all that matters, especially to oil.
I'm sorry. There was one thing I missed from last night, and he gave a lot of love to infrastructure. He talked about remember there was Infrastructure Week last year, that week where they were all announcing all their infrastructure plans. He said, forget Infrastructure Week, it's Infrastructure Decade. So he talked a lot about the plans to upgrade our the U.S. Electrical grid and EV grid and bridges and highways and tunnels and all that. So that was a big part of last night too. So I just wanted to add that. Thanks for the reminder. Whoever said that in the chat. So yeah, oil. I don't know what you make of that. Right? I just continuing every day.
New highs. We keep breaking out here. I thought we were pausing, but the escalation over there. I mean, take it away from oil. Do you see what the defense stocks are doing? Like, this is an epic move for all of these things. I own LHX. I've had in the portfolio for like 15 years, probably. I had it from when it was Harris. I'm probably not selling it. My average cost base, I think, is $23. It's $255. So I don't really want to realize that gain. But, look at these stocks. Lockheed Martin goes up $20 every day. It's pulled back a little bit here this morning. But, I mean, this is just an incredible move. General Dynamics, NOC, RTX, all just blasting off, breaking out all-time highs. These are incredible, incredible moves. If you get de-escalation, the arrow come out of these things quickly. But as long as we keep escalating over there, as long as Putin, there's a fear of, more war, then you're going to see these stocks hold up. So all depending on what Putin's next move is.
Yep, that's basically what we're coming down to, and unfortunately, I don't even know. Like, every day there's developments, but it's very difficult to understand which of those developments are like significant in the grand scheme of things, and which of them are just like moving the ball forward or backward by an inch at a time. Right? It's very difficult. Like, as I understand it, the most important headline overnight or from yesterday really is the fact that there is no timetable for any more de-escalation talks. No, Ukraine has no idea. That's what they said. They don't know when they're going to get together again. So until that happens, I don't know how we're in the same situation that we've been in all week, right? Until that happens. So that's kind of what I'm watching out for, is the next time we get any indication of potential peace talks. Not that the first round was, good for Ukraine in any way. It wasn't. But let's move on here, and let's talk about some of the big movers of the morning. Let's talk about, they're mentioning it in the chat right now. I think I had Ford next on my list, but let's all right, actually, no, let's do Ford quickly, because then we can move on to earnings.
So it's not just Biden here. The mention of Ford last night. There's a headline here.
There is a headline here, and it's been rumored. It was rumored, I think, a couple months ago, and it was denied by the company. But now they're out this morning with a PR, and Ford is doing a little bit of just corporate reorganization. They are separating their EV unit and their traditional internal combustion engine unit into different businesses. And it's not a spinoff. They're both still owned by Ford, but it just changes how the company is organized, and importantly, how they report numbers and stuff. Because
focusing on the EV portion of the company separately.
Exactly. It's going to be separate entities.
They got the EV part of the company now.
Exactly. Separate entities within Ford.
And they like that because this is obviously the growth area there, so you can see and separate out the growth from the old traditional combustion engine business. I own Ford. I still own Ford. Bought it $7. I sold some up in the 20s, and I should have sold it all. In hindsight, capital is always 2020. This is a headline up 5%. I would definitely not chase on. Talking against my book here. Major resistance up at 18. I think this is a gift, really. I mean, if I was in it short term, I would sell it. I'm in it from $7. I don't really want to realize the 150% capital gain right now. But with that being said, I think this is a headline to
Big move. Big move.
Fade.
I mean, yeah, 84
Talking
cents.
against the book.
Yeah. Now, the good news is that it's up here. I mean, it's holding up here, right? Up 83 cents. I mean, that spike that we see on the upper left chart, that might have been like a bet, a false print, but 17.
Are you talking about the spike down?
Yeah.
Joel, what time was that spike at?
What did I just say?
It might be a false print, but you don't even have to acknowledge those. There's false prints at 8 o'clock on everything. They're old closes. So where it's just an old trade that's getting reported late to the tape, they all come across 8 o'clock and they screw up your charts.
Wow.
Ignore everyone. To everyone, I want to explain it again here. Ignore every single spike you see at 8 a.m. Eastern if your chart providers are picking up the off-exchange stuff. Sometimes you may have a chart provider that can filter that stuff out, but you'll see these ridiculous spikes at 8 o'clock. You cannot get those prints. Those are old trades getting reported to the tape late. A lot of times they're at the close. That one wasn't. It was at 17. So it's probably, some cross from Liquidnet or something. We don't know because FINRA has no transparency in the tape. 45% of trades happen on FINRA, yet they all just classify, the 50 dark pools, all the off-exchange stuff, Liquidnet, everything, just as blanket FINRA. It's a mess.
But it's more than just 8 a.m., right?
Yeah, you see these come across all the time, but you see a whole pile of them cross at 8 a.m. every day.
I thought
every single day. There's a pile of them that hit at 8 a.m. I don't know why. Maybe if somebody knows why, they come at 8 a.m.
I thought it was 7, 8, 9. I thought it was every day.
No, 8 a.m.'s the big one.
Okay.
At 7, you see spikes that are real because Edge opens. So you have the BATS exchanges that open at 7. Those are real trades. Those are trades actually from the exchange because those are opening. And also a lot of retail brokers come online at 7 o'clock. A lot of them don't have 4 a.m. access. So actually at 7 a.m., those are real trades happening. At 8 a.m., they're typically just old institutional crosses that haven't hit the tape yet. And that's why there'll be a wave, the price is way, and you're like, oh, it just happened down at 17. It was just an old trade. It happened before. It's just getting reported now. So the 8 a.m. stuff, when you see these movements, unless it's news, obviously if there's overall headline breaking or something. But, when there's no news, you see a trade away on your stock, it probably was an old trade, and you cannot participate in that. It's simply being reported late. The trade happened before. So you can't go back in time and participate in the trade. It's already happened, that trade. It's just getting reported at 8 o'clock.
All right, back to the Ford chart.
Yeah.
We're talking about Ford.
I like.
I know. It's fine.
This is why we're different. This is why I feel like we try to take this show in a different direction, but I feel like we are a teaching show. We're not a stock pick show. We do a few stock picks, but I feel like we're trying to teach people on this show. I think this is why the show has become more popular, because we take these teaching moments and we try to actually teach stuff, as opposed to what stock do you like? What stock do you like? Dennis said buy this. I'm going to buy this. I mean, that's not what we're about.
Okay. So I'm just going to say the 2-day high is 1768. Your pre-market high is 1760. That's a big level. 1768, 1760. Ford's always good for looking at the pre-market high and seeing if it, we can get through it. You probably have, it's traded a lot of shares. It's traded almost 5 million. So you'll be able to chew through a lot of the stock in the book. But, good resistance. I'm on the same side with you on this one. Ford, what's the average daily range is probably even less than the amount it's up right now.
Yeah, it's a big move. So I think it's just a headline that everybody gets excited about. Ooh, EV,
yeah.
Ooh. But you know what? We're not in 2020 anymore. Back in 2020, probably goes $19 on this. It's because we're stupid market. Not stupid market anymore. Market's like, it doesn't really make sense. And this is just a fading market altogether. I mean, here's the S&Ps, Joel. Case in point here. We have leaked. Bring up the S&Ps now. We are leaking since, I came to my desk 2 hours ago. This has been a constant leak. We've lost 20 points. I don't know how high we were on the S&Ps, but we've given back way over half the
23.
gains.
Yeah, 23.
Over half the gains here. I think this market is still guilty until proven innocent. It's why I've actually raised cash further. I didn't realize I've done this, but because I sold a couple of things. I sold part of my Square even yesterday, just because this is the market that if you don't take the gains, the market takes them away from you. I watched the Square gains go away a couple times, so I sold another chunk of my Square. I've sold 3/4 of the position now. So I know it's in the long-term stuff, but I mean, you buy it at 98, it goes to 127 in 3 days, and I just know the way this market works, and I end up going back there, I'll re-get it. So it's a tough market to just hold, and we are just leaking here right now. Did we have an 815 number? We're really
No,
moving
I
around.
don't think so.
Nothing?
It's just the way this market's
It's
been.
this market
Yeah.
is it's a tough investing environment. It pisses you off as an investor almost, unless you're in oil and some of the defense stocks, but they'll piss you off too eventually because the war eventually de-escalate, and then the air will come out of those things too. So it's a take your profits while you got a market. And if you don't, they go away. And, I think that's why trading, fantastic. Investing sucks right now. If you're a long-term investor, oh, my stock's going up, it's good. And then 2 days later, it's back down. You're like, what the hell? This is a tough investing market.
Let's go to earnings here. The big
ADP came out.
There you go. I knew it.
No.
Yes.
No, it didn't come out at 8:15.
Yes,
Oh no, yes, it did. But
no.
We chopped around on that.
All right, fine. I mean, come on.
ADP matters all of a sudden.
No, it doesn't. No,
it's
we
on
go
CNBC.
through this
Revised to 509,000 from minus 301,000. I don't know what that means, but it means chop.
Do you know how many times? Do you know how many times ADP has said one thing and the jobs number said the exact opposite? It's like every other week or every other month, whatever. Like there were so many times where like, oh, ADP hinted that the jobs number is going to be really good or really bad, and it comes in the other way. So I don't put stock in that number honestly anymore. I used to, but I don't think it matters. Let's go to earnings here. Nordstrom is the big gainer of the morning, up 31% this morning off of their report. I'll give you the numbers here from the Benzinga Pro. Earnings per share from Nordstrom that they reported last night, $1.23 versus $1.02 estimate. Revenue of $4.38 versus $4.35 billion estimate. So they beat on the top and the bottom line for last quarter. As far as their forward-looking guidance, they gave a range for the EPS for the fiscal year. Call it like low to mid $3 range with sales growth of 5 to 7% year over year. Both those numbers are above estimates. And like I said, 31% pop this morning.
Go, Joel.
Yeah, thanks, Dennis.
The stock up 31%. You know what I'm going to say.
Yeah.
But it's in a gappy area, too, so it's a tough short.
Come on,
you're in the middle of nowhere.
Oh, wrong thing here. This is what I'm going to do on this chart. Because you are gapping into a gap.
What?
Look at this.
Into a gap.
What does that say? So
those are all question marks.
Okay. It was hard for me
to into a gap.
Yeah.
There's all air everywhere.
I'll give you the pre-market high and 27.25. So that's like right here. So if you want to, if that's your target, if it gets back up there, it's about $2 away. I don't know. I think you got to pick an intermediate number. What's this high right here? How many people want to get their money? Well, 25.24. I guess that's support. LOL. We came down to 25. This is a huge move. If booking profits. If it doesn't take out the pre-market high, it's going to do a target. And that's what I'm saying here. Well,
target held up pretty well. It leaked some, but the thing is, these ones that we beat, it seems like 3 days later they start to give it back.
Yeah,
you get 30% of your stock overnight in this market.
Jeez, yeah,
thank you very much. I take the money and run. I don't own any Nordstrom, but I would take the money and run.
Yeah, you can't. I have absolutely
it could continue higher. Cheap stock, low P. Coles is,
Look at this snap still holding up. Can you believe that? Snap is still holding up in this market from that earnings report.
Everybody, that's just
That's crazy.
Yeah, but again, growth has had a pretty good few days. I know it held on to those. It's pretty impressive. One of the only ones that did held the gains. Facebook's at such a low bar, and obviously got over that. So I don't know. It's been holding up. I still think on pullbacks here, a little more high growth in your portfolio wouldn't hurt. On pullbacks,
I know you've been saying that, and
it's been working.
Yes, it has been.
I continue to say something when it's working. I stop saying it when it doesn't work. That's what you gotta do as a trader.
Yeah,
Go with what's working.
Wait, just to answer a question from a chat, because young Killa asked, explain what do you mean? What do you mean air everywhere? It just means there's no price.
There's no level. I can't give you a level.
When you gap into this gap area, point out the gap, Joel, on the chart that you're talking about. You can see on the top right, all that air from when it gapped down in the last earnings report.
Yeah.
You can see the stock gap down. Look at that huge gap. It gapped down from $31 to $25. So now there's nothing in there, really. It's traded through that area. So when you get into that area, there's no levels. There's nothing to look at. You don't really have anything to get the low of the thing and psychological up to 30. But then, you're in this whole gap area, so it can kind of just go freely everywhere. There's no support, resistance. There's nothing in here. That's what he means by air everywhere. If it can get back down under 25, which it seems to be wanting to do, then that resistance kicks back and it gets out of that gap area, and then it's 25, 24 is resistance. But right now, that's, acts a little bit maybe as support here. But again, you're on an earnings report. You're on a market that, is very inclined to take profits and stuff. So in a market that has punished, and I mean punished, chasers for the better part of a year now. Yeah. So I'm not chasing something up 31%. It might go up 40, but it's going to go up without me.
If I said to you, well, the next resistance level is 30.79 to fill the gap, okay, that's where the gap is. So if that's your target, I get out there at 30.78, just in case it skips over your print, but that's it. That's a tough chart. And you also have to think about well, first of all these people, they're like, oh, well, I still own it at 32. I'm not going to get 32 today. But all these people are sitting on some nice low of the move last Thursday, right? 1865, and you're 27. A lot of people made money here, right? A lot of people.
At least in the last 3 months.
Yeah, right, right. Since the end of November, but that's what we're looking at. That's enough out of Nordstrom's.
All right,
I used to buy shoes there, but I don't go there and I don't buy shoes. So
I went to Kohl's and Target over the weekend on a mission to buy shoes. Kohl's was unhelpful. Target was
really
semi-helpful.
You don't do it online because you can't try them on?
So you're reopening now, Joel. We can go out to stores. It's fun.
How's Foot Locker doing?
Not
Anybody
great.
need some tennis shoes?
They bounce back?
Not great, I don't think.
They're trying to hold on down there, but not looking that healthy. No.
Yeah. Anyway, all right. Let's move on to SoFi here. This is one of those reports.
Yeah.
This is one of those reports where you see what you want to see. If you're bullish, there's reason to be bullish. If you're bearish, there's reasons to be bearish. All right. In terms of the EPS and the sales for last quarter, they both came in above estimates. Their guidance though was light. I think that was in part due to expanded student loan forgiveness, which I'm not going to cry about that. So in terms of their new members, though, they added 523,000 new members last quarter, which is a new record for them in terms of just number of new members added, new customers added. So it was their best quarter ever for customer in terms of just quantity of customers added. And again, the guidance was a little bit light, but the earnings were good. So you kind of see what you want to see here.
Yeah, you did get to 14, but boy, oh boy, you got darn close to it. You got to 1381. Wowzer. So I'll give that as a target on the upside. I do see some pre-market support at 1250 right now. So anybody that sold into this pop, they don't care about filling the gap down to 12 or anything like that. So a little bit of support at 1250. I just can't take my eye off this area here. Just over 13, kind of where we're trading now. It was pesky, 13.25, 13.41. A lot of highs in that area. So I think probably to me, you're opening into resistance. But the pre-market high, 1381. Nothing on the dailies. Nothing on the dailies telling you it's just stop there.
All right, I should clarify. The Q1 guidance was light, which they blamed on the student loan moratorium, the payment, but the fiscal year guidance was okay. The sales guidance was above estimates. The EBITDA guidance was above estimates. So for the whole year, the guidance was fine, but for the next quarter or for the current quarter, guidance was a little bit light. What about where was I about to go? Oh, I was about to go to AMC. I had the chance to listen to the call last night. We streamed it on our YouTube account, AMC.
They sell more popcorn.
They are selling a lot more popcorn, Dennis.
Turning it into an NFT.
That is the plan. All the stuff, all the NFTs, all the popcorn. They talked about their expansion into grocery stores, and they're doing a food delivery thing now
and accepting Bitcoin
with Uber. No, not Bitcoin yet.
Oh.
They're accepting Shiba Inu and Doge, not yet, but in the coming weeks
all the buzzy ones.
Yeah, all the buzzy ones, exactly. The biggest takeaway for me was, and I didn't even know this, but going into yesterday, but apparently in Europe, it's common for movie theater companies to charge more money for specific shows, and also for specific seats in their theater. It's not all one price, which is how it is in the U.S. That's changing now. AMC is going to the European model where they will charge more money for the premium movies and also for the premium seats in their theaters. I had no idea this was a thing, but apparently it is. So there's that.
Are there any good movies out right now?
There are a couple big ones coming out.
There's all superhero movies.
Batman's about to come out.
Always superheroes.
Yeah,
that's all people like is superheroes.
Yes, that's the truth. That's the truth.
Every other movie is a superhero movie. And we all live in the metaverse. And
I knew the metaverse was coming up.
And we all just dream that we're superheroes. Yes. Such an awesome world.
Yes. So anyway,
I don't get it, man.
Wow,
I go outside, do some stuff, enjoy. People want to just play video games and live in the metaverse. So have at it. Wasn't that Dave Nathan one who says have at it?
You know what is, and I'm just going to go back to this one. Remember, this is like when this thing first started getting reddited and getting pumped. It had that move to 20. Remember that? And then it came all the way back in.
Back to 5.
It's just kind of like a reset here. Like look at this 20. I mean, you didn't quite get there in the pre-market, but if this could get back over 20, hold 20, that's
where it gets interesting.
Yeah, it gets it. Right now, trading range, man. TradeTheRange.com. You buy it at 15, you sell it at 20. You buy it at 15.
And it has no fundamentals, so...
Yeah.
I mean,
so if you're good at trading ranges and things like that, kind of get near the top of the range.
Hey, you can't say they're not trying new stuff. They're trying a lot. They're throwing stuff.
Everything that's buzzy
and seeing what sticks.
You know what I think of that?
What about Salesforce here? That was kind of your big gun reporting last night. EPS beat 84 cents for 75 cents. Sales beat 7.3 versus 7.24 billion dollars. They also raised their fiscal year revenue guidance by about $500 million from the low end. Prior was 31.5. Now it's $32 billion. So Q1 guidance also. Let's see. Q1 EPS guidance was light. Q1 sales guidance was good. Fiscal year EPS guidance was light. Fiscal year sales guidance was good. So lighter on the EPS guidance, okay on the revenue guidance. So top line cool, bottom line not so much. What does this translate to with the stock? Oh, it's up.
I don't know. Benioff comes on Mad Money and always has to tell us how awesome his company is.
That is, I was just going to say, is the braggart been on...
oh, yeah.
Does
anybody brag more about their company? Maybe the ServiceNow guy. I think he actually trumps, and he came from Salesforce, I think, so he learned from Benioff. You really got to brag hard about your stock. Anyways, I'm sure Benioff's a good guy, but man, he brags about his company. It's almost nauseating how awesome Salesforce, and every good company that came out of cloud came from Salesforce. And, we know everything, and we're the best company that's ever been created in the face of the earth. I mean, I have to hear all that, and Kramer has to, basically just agree with everything he says and say how awesome he is, because that's what Kramer does.
He made the call of a lifetime. In 2011, he wrote like that famous blog post, right? Software is eating the world. And he was absolutely right.
He's right. He's been right.
Yeah, he made the call of a lifetime.
But he has to tell us so much that he's right. You got to tell me so much how right you are.
All right.
It's just my pet peeve when somebody's got it.
That's exactly what I was thinking,
company.
though.
You don't have to tell us how awesome you are.
And I don't even watch CNBC nearly the amount that you do. But
I watch the Mad Money. You can move stocks.
right. No, I know.
I like
know.
Jim. He's funny.
I
laugh out loud.
I know.
Jim's
I'm just having fun.
we always let's get Jim Cramer on the show.
I would have been out there.
I think it might have been exclusive.
Yeah, I don't think you want to do that. Just real quick before I do the technicals, who was the biggest braggart ever on CNBC about their stock?
Oh, I don't know.
Yeah,
ServiceNow guy is something too. I don't know
No,
what his
come
name is, but he's
on.
pretty good.
It was during COVID.
It was that oil tanker guy.
Oh yeah, he's awesome.
Nat,
N-A-T. But that was one of the best interviews ever. We're raking it in, man.
Hey,
he said that on Mad Money.
Hey, pull that chart up. N-A-T. Pull that chart up right now.
I am.
N-A-T.
It's kind of blasted off here in the last couple of days.
Yes.
Look at this oil.
Yep, this is when he was on CNBC right here.
$9?
Yeah, that spiked to $9.
Yep. Yeah, that was the top. That was not joking. That was the total top of it when he was saying, "We're raking it in." Sell button, sell button, sell button. That's what happened. That interview was awesome.
Anyway, all right, boy, but this
the accent. I love the accent. I love that guy.
Yeah.
Anyways,
all right.
But yeah, he's
Salesforce. I want to give a level of Salesforce before I forget. And there was something jumping out to me, and I think it was 222, room 222. You got there in the pre-market, and then the dailies are supporting that. Look at that. After you had the gap down, I don't know what that reason was, maybe market conditions, but bunch of highs, 221.5, 222. Coincides with your pre-market high. Bad news is you backed off $5, so going to have a little harder time getting back up there.
All right, and then last one I want to do before we bring on our guest is First Solar. This is interesting because the earnings were okay. Like the EPS came in above estimates, and their sales all missed not by a lot. But their guidance came in so light, and I'm unsure if that was if that was because of supply chains, because they talked about supply chains a lot on the call, and how they're continuing to face supply chain problems. But their EPS guidance for the year, they guided a range of 0 cents to 60 cents versus an estimate of $1.92.
Got a truck through there.
Right, I know. And there's
not even that. It's just $1.92 versus 60. That's a pretty clear miss.
I know. So there's some either weird adjustment there, or
it always has weird adjustments.
A weird one-time event, or maybe it is just. I'm just wondering why the EPS for last quarter was comparable at $1.23. So they basically made more money last quarter than they're going to make all of this year. Is what they're saying.
They're doing some investing or something.
Yeah,
maybe. But anyway, stock's getting drilled here this morning. I think it's on an EPS number.
Drilled. I like that. The solar stock getting drilled. You've thought about that one.
9 sticks. Wow.
I don't get it.
On the headline number, you got down.
Drilled. You made the joke. It's good.
62, 64.
Competing with oil.
What joke? I didn't even get. Okay.
I'm not sure.
I don't know if you met the joke, but it was really funny. Actually, it was good. The solar stock getting drilled.
That was not intentional. No.
I laughed.
I don't know. Someone was out there after that spike down to 62, 64. Then someone decided, okay, I want to bring some stock in at 64.
I tried to buy it down
and
there.
and then the algos kind of sniffed them out, or her, or it, or Dennis, and so now who knows where this can go on the upside, but I think you find buyers. I
think you do too.
Yeah,
for the simple reason is that we had this wicked run in all the growthy solar names, and now you get a dip back down near those lows. I think people take a shot at the 62 to 65. I think the dip gets bought as well. Even though the guidance is terrible, I do think this dip gets bought.
Oh, another leg down here.
We're trying to go red. We probably will. It's the sell the rip market.
Let's talk about commodities. Let's talk about commodities. And in order to do that, we have to bring on today's guest, Angie Setzer. She's the co-founder and partner of Consus ROI. Bring her on the show right now. Long time, Angie. We miss you.
Hello, I miss you guys. He reached out this weekend. I'm like, heck yeah, I'll be on. It's a blast from the past.
Well, because you got a new email address. I emailed you.
Yeah, you were hiding from us, Angie.
She must not have my email anymore or something. But
Yeah,
you,
as of June 30th of last year, I decided to become unemployed, which is what starting your own business is until your first check clears. So we started our own business July 1st and have been kind of rocking and rolling ever since. So yeah,
are
it's
you still
been
in
an
Michigan?
interesting time. Yes, yep, still in Michigan. I'm working with customers here. The customers I've always kind of worked with, and then we're working with customers and other commercials, financial investors and some folks like that across the country, and just kind of living the dream, I
All
guess,
right.
in a
Great.
very weird market.
Yeah, great follow on Twitter. She's the goddess of grain, and for you guys, I haven't told this, but I fixed her and her husband up on this show.
Yep.
Carl
Yeah.
Setzer, the king of corn and the
Some
goddess
days
of
I'm
grain.
grateful, other days I'm like, Joel.
Maybe that's why she hasn't come on the show.
Do you wonder why I was hiding? Like, thank you for that, albatross. But no, it's been great. It's been fun. I mean, it's been a while, like 8 years since we first
I
started.
know.
Wow.
So talk to me about these commodities. Talk to me about wheat and talk to me about corn and soybeans. What are we gonna do?
Oh, I told a customer this morning, I said, I've lost count of our black swans, right? So like everything started in like August of 2020. During the pandemic, I had customers wondering how they were going to survive selling $3 or less corn. I mean, we broke $3. 280 was a price paid for a while there, in April and May of the pandemic. We were worried about what we would see long term, and had this idea, well, if we can ever get back to $3.50 or $4, we'll be okay. Like, we promise we'll be good. And all of a sudden we ended up at $7.50, plus futures by May of 21 on corn. And we just continue to see things that you don't expect to happen. I mean, I think I'm just kind of continuing to eat my words for the last 17 years, where it's like, you have to assume normal, right? Like every year when you trade commodities, you have to assume it's going to be a normal year. Well, for the last year and a half, everything that you could have assumed would be normal wasn't. You ended up with droughts and production issues and wars and demand spikes out of China and all of these things that could really come together to create this perfect storm. And here we are sitting, I'm remembering, 08 into 09 and what took place when companies were blown out and ethanol plants, ended up having to file bankruptcy because the market just ran up so far, so fast. And then, the worst part was the collapse. But for now, we're just doing the running up so far, so fast thing and trying to hold on tight.
Yeah, but is part of you like bracing for the other side of that journey, right? Because we all know that fast run-ups not always sustainable, right?
Yeah, I mean, there's no way I can see that we have a soft landing in any of this, right? So like, that's the part where I'm not trying to come on and be like, okay, well, I'm going to look at you with a smile on my face and I'm going to tell you that it's going to stink. But I mean, I don't see how we can go from here to fix inflation and do all of these things without having an epic collapse in commodities, right? Like, you're not going to fix food prices unless you figure out how to reduce vegetable oil prices. Like palm oil is an all-time record high. Soybean oil is an all-time record high. A lot of folks like to talk about wheat and what it does to the price of bread, but we forget that vegetable oil is a cornerstone, of all of the things we eat. And one of the things that we've seen recently that's really kind of, even without the supply shortages that we've had, we've seen this push out of California and other states that are embracing the green energy movement, which I'm all in for, in ways that make sense. But, we're looking at pushing and utilizing soybean oil for renewable diesel and sustainable aviation fuel and things of that nature. So that's really kind of exacerbated some of this move higher in the vegetable oils as well. So like, that's been the thing that no one's really paid attention to, is the fact that palm oil, soy oil, sunflower oil, which is now sitting, in Ukraine and Russia waiting to be shipped. These oils have really kind of driven everything higher as well. And that's going to keep these food prices elevated. And, Powell just reiterated this morning that he's going to do what he can. We see inflation easing this year. And I look at this market structure right now, and even without the Russian-Ukraine situation, I'm not sure how they make it happen.
What about wheat here? Like, speaking of Russia, Ukraine, right? And wheat and Ukraine, we've talked about that a little bit in the past couple of days. You have a better understanding of that market than we do. So can you explain what's going on there?
Yeah, I mean, Russia and Ukraine are in the top of global wheat exporters. And so the one thing about the wheat crop that's unique, at least in Ukraine, the bulk of Ukraine's wheat is winter wheat. So that was planted last fall and will be harvested July, August timeframe. Russia, 70% of their crop is winter wheat that was planted last fall, with 30% of it being spring wheat that'll be planted, supposed to be planted in about 6 weeks. And so right now, the bulk of Ukraine's wheat is shipped. Probably about 2/3 of what they were anticipating to ship is gone. Russia has really struggled. Russia has been doing some really interesting things in the global market anyway. They really kind of propelled themselves to the world's largest wheat supplier. And then starting in the tail end of 2020, saw some domestic food inflation start to take place. So they introduced this export quota and this export tax and really started to manipulate or control the amount of wheat that they were allowing to go out into the global market anyway. And that's really where wheat started to take off. Like wheat kind of drug, even with soybeans rallying big on the Chinese demand and some of that stuff tail end of 20, wheat kind of just sat there until Russia really started to say, okay, we're not gonna just ship everything we have anymore. But Russia is one of the world's, if not the world's largest exporter of wheat. Ukraine is right up there. They had a record crop last year. And so the fact that they've removed themselves essentially right now from the global market, has created yet another supply chain, at least we hope, short-term supply chain hiccup in a world that's already been inundated with short-term supply chain hiccups. And so there's a real concern. Australia had a record crop, so they can kind of step in, or they have stepped in to kind of alleviate some of that short-term Chinese demand, but their ports are all booked out into the third quarter. So, the struggle that we have right now is we've basically dislocated a significant amount of wheat supply available to the world, and we don't know when it's going to come back. And then obviously the biggest concern, the secondary concern in all of this is if this war wages on, you're going to, we don't know how badly, but you're going to adversely impact the ability for Ukraine to produce and ship. And Russia, right now is going to have a real hard time getting their hands on any of the necessary supplies that they may need to import. And we still have a lot of questions about what's going to happen with them domestically speaking. So right now, I think based on what we've seen over the last couple of years, to have something like this take place is just kind of exacerbated this concern of food scarcity and food shortages. The bins are still full, or the supply is still there, but there's no getting it. And Ukraine it produces the bulk of their crops to export them. And so to have their exports completely shut off right now really makes us wonder what the heck the next step is.
Wow. So much there. So many different things to say. I mean,
so
I know. I'm like, oh, I
feel like I need to create a flow chart. Like,
I have a follow-up, Angie.
Yeah.
Is there
sleep again tonight?
Is there a script for this? Because a lot of times when you have any macro developments, there are scripts for it. But like you said, we've kind of got four things happening at the same time. And is there a playbook here for how this plays out, or you have no idea?
No, there's no playbook. I mean, I think in the short term, the thing that you see happen, and that was part of, we saw that article come out overnight, the sources not wanting to be named, but familiar with the situation, which in ag, you were inundated with those people during trade war. So we would trade, up and down based on sources to be named later. But overnight, we saw some conversation that China was instructed to basically come in and cover any shortfalls that they would have. And I think that's the first step in any sort of supply shortage is if you're an end user, you try to be the first person to cover yourself before the rest of the market recognizes that there's a physical short, right? So I think the first step in the playbook is to make sure if you're exposed and are a physical short, meaning that you expected this physical delivery to come out of Ukraine. You have end users that want that, as an importer, you have end users that want that. And they're going to hold you to it because you told them you would get it. They don't care where you got it from. You're going to have to scramble and try to make sure that you're covered and have that physical grain ownership. Like that's one of the things about commodities that I find the most refreshing or the best, like having listened to your conversation earlier about AMC and some of that other stuff, is like the physical market structure tells you what actually needs to take place when it comes to the futures. But right now, that entire market is so unclear. We're all just scratching our heads. And so, the first step is you cover your shorts. And so I think that's part of why we've seen this rally just explode to the high side. We'll separate out what we need to do later. We're just going to make sure that if we're exposed in any way and this futures market continues to run, you're covered. Beyond that, we have no idea. I mean, we're really looking at a situation that most of the veterans would say, I've been doing this for 18 years now. I read an analysis from a gentleman that's doing it for 46. And he said he's not experienced anything like this other than potentially in the mid 70s. And when you say that to farmers,
that's good to know.
Right? When you say that to farmers, especially when you're looking at the highest rate of inflation since 82 and what took place with interest rates in the mid 80s. I mean, when you say to the farmers, oh, no big deal, this just reminds me of the mid 70s, the guys and gals that survived that time, you send chills down their back. And so that's our biggest concern, is not what happens in the short term or how high this thing runs up. It's what happens next if our input costs stay incredibly elevated, because we rely on a significant amount of our fertilizer to be imported from Russia, Trinidad and Tobago, Belarus. You know what I mean? So like we've relied upon a lot of their supplies over the years. So what happens if our fertilizer stays elevated, our chemicals and everything stays elevated? But the futures market, Powell was right. He does what he needs to do. The economy runs into whatever it's going to run into in order for us to see inflation go away. And suddenly we're trying to sell $4.50 corn, that cost us $5.50 to produce it. I mean, there's a lot of moving pieces that we're watching right now, and there isn't a playbook. That's the unfortunate thing. Like step 1, cover your shorts. Step 2, no idea. Step 3, hopefully we make it through to do it again next year. Like that's really kind of where we're at.
Are there any catch-up trades here, like in other commodities that haven't run up yet, or is it just pretty much across the board?
I feel like it's pretty much across the board at this point in time. I mean, you'll see some that might lag occasionally. Like there's some conversation about meal lagging versus oil and some of those other things. So soybean meal may potentially be a trade, but I mean, you're looking at soybean meal from a historical standpoint, $400 meal, $400 plus meal isn't necessarily cheap. And so there really isn't much in there that you could say is a huge opportunity if we don't continue higher. But at this point, if we do see the tension wage on and the issues wage on in Ukraine for another 1, 2, 3, God forbid, 4 weeks, now we're impacting new crop production. And so it is very possible that you could see a continuation of the move higher if we don't see a really large crop come out of South America in the next 3 months, and then secondarily feel confident in the ability of the US to produce a large crop in the 3 months after. And so basically we're just kind of sitting here for 6 months holding our breath, praying that we don't run into another black swan issue with the South American drought like we had last spring, or God forbid a US production issue.
How about the economic impact, on Russia? I mean, is it just, that they just don't care, that it's just,
I think they care. I think they care huge. I think one of the things that I was most struck by, or one of the feelings that I had when all of this happened, because I mean, we've watched this for so long. Like I've been watching the Russian, all of us have been since Thanksgiving, and so I was really, really concerned early on. And then we got closer to the Olympics and I'm like, okay, maybe he isn't planning on doing anything. Maybe this is just all an exercise to see what the West will give, blah, blah, blah. But then to see them just launch a full scale invasion and attack, it struck me. And the biggest thing that I thought about was not just the Ukrainian people, because obviously they're heavily impacted, but the Russian farmer that spent so much time to kind of rebuild his or her equity and create, they've been working to modernize their infrastructure and their production practices. And that's been part of the reason you've seen them become such a global player in the market. They have phenomenal soils. They have phenomenal access to inputs and all of these things. I mean, they really could be, to a certain extent, the breadbasket, or at least kind of share that whole breadbasket of the world approach, and we just saw it. I mean, we just reverted back to what they were doing in the 90s potentially, you know, and I just can't imagine having your livelihood just absolutely taken, you know, by a decision, you know, from your country's leader.
Probably a bad time to mention that, according to, you know, media reports, that U.S. intelligence officials are guiding that this could last years. So
yeah,
if that's
the concern.
Yeah.
And I said that in this morning's commentary. My thoughts this morning is like, what's the end game in this?
Yeah.
Because the Ukrainians are not going to give up. Even if you were to see them overthrow the government, the Ukrainians have made it very clear that they are not going to give up. And Putin's made it very clear he is not going to give up. And so, yeah, I think that's part of the reason you've seen the wheat market gain over $2 in 8 sessions. And all of these things really happen is, you know, we're looking at best case, a shift in the dynamic of the geopolitical alliances.
And Angie, before we let you go, can you say something that's going to make us feel a little better here? Just say one thing that's not scary, please. And it could be about your cat. I don't care.
It'll be scary. Every day is Catter Day, according to my cat. So let's all party.
Catter Day.
I mean, it's concerning, but I would say overall, just, you know, the one thing I can say for the U.S., we are independent food producers. So we are in a far better situation in the United States because we are independent. We can provide ourselves what we need from a food standpoint. So we will be insulated in a lot of ways. But it's definitely going to be something globally we're going to have to continue to watch.
I just want to ask you about the farmers. Like, I know this is going a little long here, but what like for the U.S. farmers? I mean, are they trying to hedge out for the next 5-10 years? I mean, you can always look bad after you do that, but
yeah,
you know, they probably feel horrible that they're making all the, you know, all this money because of a world crisis. I mean, are they just trying to hedge out as far as possible, or the futures market not
looking at we're talking about looking at 23. The market's incredibly inverted, or for those of you not in grains,
it is inverted.
Backwardation. Yeah. So I mean, there's not as many opportunities.
Okay.
But
well, that's good.
That's good news, we're still looking at trying to maintain margin and do the things that we have to do to get there. But yeah, I mean, the U.S. farmer right now recognizes that this usually doesn't end well either. And so we tend to be an optimistic person with our feet firmly entrenched in reality. So we recognize, you know, what the situation looks like, but we also understand that, you know, risk management will be key this year. And so next time you see me, I'll probably have pulled all of my hair out, but we will continue to persevere.
All right, Angie Setzer is the co-founder and partner at Consus ROI. Her Twitter handle is at Goddess of Grain. It's in the description of this video. Angie has been far too long. This was a fantastic conversation. Thanks for coming on today.
Thanks for having me. I'll look forward to seeing you guys again.
All right. Oh man. Oh, I don't feel good about that. I don't feel good about things anymore.
No, I know. I sell everything.
Holy moly.
Except grain.
Jeez, I don't even know how to come back from that one. All right, let's move on here as best we can. We got 7 minutes left in today's show. We can do some ticker time if you guys want to. So drop your tickers for us in the chat. We'll take a look. Let me see if there's anything big that we missed as far as the news front or the movers or the earnings front. Nothing super big that jumps out to me on the movers tool and pro. Someone just dropped PaySafe in the chat, and PaySafe is up 8% this morning. Did they have earnings? They had earnings. That's what it is. Okay,
it's
so yeah,
$3. It's $3 stock. It's a call option now. You know, it's a 0 or maybe it's going to be something. That's what PaySafe is now. It's just an option. At $3, when they start getting under $5, they're just speculative buys. We don't know if it's going to materialize or not. Maybe eventually it turns into something. Maybe eventually goes to 0. Coin flip.
Yeah, you've leaked off that high at 340, and that coincides nicely with
the bag holders everywhere and all this stuff.
Yeah.
All right. Well, thoughts on John Deere. I would think with the quote unquote infrastructure decade that we are supposedly entering, according to the president, that John Deere would be a good way to play that. I would think.
I don't like the chart. Simply because this is a nice 50% retracement, Joel. You can see it there, 400 to 320, and $40 brings you right back to 360. perfect 50% retracement, double top in the same area. The technicals say sell it.
Yeah, and it just very spotty trades, 1,800 shares. I mean, right
Yeah,
now,
pre-market. Is there a headline? There's no headline, is there?
I saw this morning.
I mean, you haven't taken out 362 yet. So there, take a look at that. 2 daily highs, 62.39, 61.87. It gets through there, boom, right? There's more room on the upside. If in fact it can hold 362, if not, I look for a little bit of a fade. Next daily level comes in at 370.47. So see if it can hold the open. Also, if you just don't want to trade it today, you just want to see how the action is. The high close of this rebound's been 360.02, and that was from yesterday.
I seriously almost think it's a short. That's
Okay.
I don't like it at all.
Really? Wow.
But it's just a chart. It's a pure technical
Yeah, just
stuff.
looking at it. Yep.
All right. Here's one. Bino. This is this is oil. Sorry,
Yeah.
I didn't realize that's
oil is just gone.
Sorry. We talked about oil for 20 minutes today. It seems like. What about trying to find tickers that we don't know? We always talk about AMD and Nvidia. I feel like all right, we can do Okta, OKTA. I looked at that one for a minute.
Cloud will be up on Salesforce a little bit here, probably this morning. It's been a nice bounce again. Now it's like, okay, when they were in the gutter 3-4 days ago, there was an opportunity, but now we've had a significant bounce. So it's like, okay, well, we just went from 152 up to 184, $30, 20% in 4 days. It's up 20% in 4 days. If you're buying it now, feel like you're doing it backwards. Sorry.
Let's get through yesterday's high. First things first, 188.90.
Does have earnings tonight too.
Yeah, so there it is.
So that matters obviously too.
I
wouldn't want to hold it through the report.
Yeah,
it's a coin flip, but
hold the close. And you got to take out yesterday's highs. So longer it takes to get up, take out that 88.90. Was kind of weak into the hit that 88.90, made a new high of the move. People got excited, then they kind of flushed it. And so keep an eye. See, important to get to yesterday's high at 188.
We're in like cloud earnings season. We had workday, CRM. Now you're gonna get a whole pile of them tonight. Yeah, the Splunksters up, Okta. We're in cloud. Viva isn't Viva? Is Viva? Viva is that?
C3 AI is tonight as well.
A lot of them tonight.
Sorry, what's today? Today's Wednesday. Yes.
Yeah.
So
you're right. AI. Charge points tonight.
Yep. Snowflake. Charge points not cloud, but you get the idea.
No, I'm just saying what's big tonight. Yeah, I've already digressed. Anaplan, Box. There's a few AEOs tonight.
Victoria's Secret, American Eagle for retail.
You still got your Victoria's Secret, Joel?
Yeah.
Nice.
What the heck's the numbers, the symbols on those things?
It's VSCO.
Yeah.
Yeah, that's the one you were going to go into my account and sell that out for me.
I know, it would have been wrong.
It would have been wrong. It would have been so very wrong.
Yeah.
Anyway, okay, let's just do one or two more here. Let's look at all right, you want to look at Live Nation, LYV, reopening trade? Sure. They had earnings last week.
Well, so resilient. I mean, the stock has held up so well.
It kind of defies logic in a way.
Well, it is the reopening trade. The one concern is it did not make a new high on the last move. And that's what I would be somewhat concerned about. 127. We got
Joel,
what stock?
LYV.
LYV.
We did not make a new high last couple days. Not great. Again, if the market, it's all just depends on Ukraine. You can make all these tickers, and it's all going to be dependent on what the next thing Putin does. That's the problem with all of this technical analysis we're doing right now. It's a problem with everything. Is I could say, oh yeah, deal looks good on the short side here. Well, if Putin backs off, everything runs. So I mean, the difficult thing it's all depends on what's happening in Ukraine, and we're not getting away from that. It doesn't look like anytime soon. If it escalates in the next day or two, stocks are going to go probably down. If we start to de-escalate or start to talk about talks again, stocks are going to rally. So it's a tricky market to trade.
After making that, no, it wasn't quite the all-time high. You got two lower highs, right? And then you have two lower lows. So 115 must hold. If you want to target, you're looking 122.02 was a high from yesterday, up 250, very light volume. I don't know if you get there, but you at least want to break this trend of of lower highs and lower lows. Under 115, I don't know where to tell you to go on this one because you got a big drop down to 111.36. So, all right, guys, good job. I'm going to hop off. I'm going to have Seth Basham on from Wedbush. He's going to talk about restaurants and boy, oh boy.
Oh,
I don't
all right.
know.
Ask him about the conversation we just had about
Yeah, I know.
Yeah.
I know.
Yeah.
All right. All right. We'll catch y'all later on.
Hey, before we hop, everyone, I want to announce that we are doing a crypto giveaway on our Facebook page. We're giving away some Shiba Inu and Dogecoin. You can use it to go to the AMC movie theater if you want. We're giving away $500 of either Shiba Inu or Dogecoin. I'm putting the link in the chat right now. There it is. Steps to enter the giveaway are on that page. There's the post. Check it out. You want some Shiba? You want some Doge? Have at it. Dennis, it is 9 o'clock. We stopped leaking a few minutes ago. So I hope you feel a little better about where we're at.
Little bounce. I think we go red today. That's my prediction.
2 days up, 2 days down. Or no?
Yeah, I think we go red. We'll see what happens. I think we go red early, and then everything depends on Ukraine, though. So we can do any predictions we want. Putin does something unexpected,
and Ron Hollick with the reminder that Jerome Powell was speaking today. We are streaming that testimony 10 a.m. Eastern time. We will be streaming that on our YouTube channel, so he'll be testifying in front of Congress. That should also matter, so don't forget about that. And that's a wrap for me here now. Live trading with Benzinga going live in a couple of minutes here. This stream will end and redirect to those guys, Ryan, Mitch, Zunaid, taking you through the open. So everyone smash that like button for me. Thanks to our guest, Angie Setzer. Thanks to all of you in our chat, all of our chats on YouTube, on Facebook, on Twitter, on Twitch, and yes, even those of you watching on LinkedIn. I see you. All right. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. We're done. Good luck at the open, everyone. Stay green out there. I'll catch you later.